Welcome to Invest in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host, and I am really excited about today's podcast. I'm going to talk a little bit about some investing news from this past week, but mostly going to spend a few minutes talking about what I see is for the future, or at least the near-term ongoing future for this podcast and for Invest in the Family. For those of you who have been with me and the business, but especially the podcast since the beginning, first of all, thank you. You're amazing. But you'll notice that the podcast has, in many ways, it's kind of tracked along with my personal investing journey in terms of how I focused the podcast and the content and otherwise. For most of the life of the podcast, it has been a very interview-based podcast, and I'm thankful for that. And I want interviews to continue to be an important part of Invest in the Family. Those interviews have been very instrumental in shaping me as an investor and as a businessman. Hopefully that the same can be said for you. The fact that so many of you are still listening and more are coming in tells me that is the case, and I'm thankful for that too. But also, of late, I've tried some different things in terms of maybe focusing on like some relevant investing news and updates, which I think also does have value. We're going to do a little bit of that here today in a minute. But also we had the big DIY investing summit back in January, 2 months ago. And I know a lot of you participated in that and heard lots of encouraging things back from you on that. So I'm just thrilled by that. I know it was very instrumental for me to have been able to sit down and conduct all those 20 plus interviews with some of the best investors that I've had the ability and opportunity to interact with, was really instrumental in just being able. I especially love the foundational pieces of those interviews where we talked about, biggest lessons learned and what you do differently if you could go back again, and lots of different type questions like that. It helped me be able to see what are the things that are consistent across the board for all these high quality investors, and what things do they differentiate between each other. And what are the big lessons learned? And so with all of that, just really an amazing body of content for foundational stuff for building an investing career off of, I feel like was kind of harnessed in that summit. So I'm stoked about it. And just for anyone interested, it is still available at DIYinvestingsummit.com, DIYinvestingsummit.com. It's going to cost you $97, but in my opinion, that is like an insanely low discount, but it is there if you want to check that out. That being said, I've been spending a lot of time thinking about what is the most significant value add that I can do for my personal investing career and also pass on to you, for you as you develop out as an investor as well. And I know there's a lot of great content out there, a lot of great free stuff and a lot of great paid stuff. So what's different about Invest in the Family? I've said plenty of times before, I think the values of Invest in the Family, I think are definitely a differentiator as far as the fact that we are for the investor and we're not here just trying to make a quick buck. We are a business, so we are trying to make money, but we're also not trying to, manipulate anyone or scam anybody. We're genuinely here to help you. And that's one of the reasons I focus on training. And I have done a little bit in the past as far as stock picks and stuff, but not something that I really want to focus on anymore because I feel like that's not, you can get better stuff like that from other people. And I want to help direct you to those people as well. All that being said, it's been spending a lot of time thinking through what is the biggest win for me as an investor can I do right now, and how can I share that with you? And the name Warren Buffett is a name that gets thrown around a lot in the investing world. People will say, yeah, we invest like Buffett or like Benjamin Graham, and we're value investors like Buffett. And Buffett, he has a new annual letter coming out. The Intelligent Investor and Security Analysis books were foundational in my investing career. All these type of things you hear about Warren Buffett all the time in all kinds of different directions. But the bottom line is the phenomenon that is Warren Buffett and has been his investing career. And he's put forth as the preeminent investor out there. And so all that being said, I feel like the problem in my experience is I hear a lot of those things are said, but I don't see a lot being done in terms of trying to learn from Buffett beyond lip service, like really learning from him and the sources that shaped him as well. Because the reality is, I don't want to view us as investors anymore. Or I should rephrase that, just investors. Because the idea of an investor, it comes to mind someone who logs into E-Trade and spends $8 to buy and sell stocks, shares of Apple and stuff like that. And that's a part of what we do. May not use E-Trade, may not invest in Apple, but that same idea in any other brokerage. And that's a part of what we do. But when it becomes that, I feel like it loses so much of the value of what is really happening. Something that Benjamin Graham says toward the end of his book, The Intelligent Investor, which again is considered, I think rightly so, a foundational investing work. He talks about the fact that investing is a business. And that's what I want to get back to myself and lead you into as well as part of the investor in the family community. I don't want to think of us as just investors, but I want to think about us as business owners. We buy businesses, and our investing is a business. You may choose to outsource some of that business and hire a manager, aka an RIA or an investment, some kind of investment advisor, wealth management, financial planner, someone else to do that, robo-advisor perhaps. You may hire a manager to run that business for you, but it's still a business. And hiring someone else to manage it does not give us the excuse to not understand our business. Because if we can't understand our business, you can't hire someone to run it well, because you won't know what it takes and you won't know what to look for in a manager of your business. So that's what I want to focus on. I want to focus on the business of investing. I want to focus on what it means to be a business owner. And I think about ideas like private equity, venture capital, wealth management, all the hedge funds, all those different dynamics are aspects of owning businesses and as investors. And so I've got on my desk right now, all that coming back to Warren Buffett. And if he is the great investor that we so commonly attribute him to being, and I have no reason to say that he's not, I think he's obviously been a phenomenal investor. I want to learn from him. I want to build a mini Berkshire Hathaway with my assets. They may never scale to any meaningful level that anyone else in the world would know about them, but I will. And that matters to me, and it matters to my family. So I want to do that. And maybe that will be a portfolio of publicly traded companies. Maybe it'll be a portfolio of some publicly traded, some private, and otherwise. I don't know yet. I suspect it'll be a mixture of all of the above. But again, on my desk right now, I have several books, and I have some more behind me. And my intention is that these books will begin to shape at least the near-term future of this podcast and of my business, Investor in the Family. The first is entitled Berkshire Hathaway, Letters to Shareholders, 1965 to 2014. And I will share some links to these books with you later on for those of you on the email list. If you're not on the email list, go to investorinthefamily.com and be sure and sign up. And basically, these are all letters that Warren Buffett has written to the shareholders of Berkshire Hathaway beginning in 1965. I think there are some letters that date prior to that. I'm going to try to get a hold of, because I think I know some sources that may be able to get those for me. Nonetheless, I'm not going to wait for that, but I want to start working through these letters to the shareholders, because these letters are going to help share the investing mind of Warren Buffett and how he has managed his business that is Berkshire Hathaway, and how he has managed the managers of the businesses within Berkshire Hathaway that they have acquired over the years, either fully or in part. Another book on my desk is called Security Analysis, 6th edition by Graham and Dodd. Benjamin Graham is widely known as the teacher, one of the people who's had the greatest influence on at least shaping Warren Buffett as an investor. Another book of his, I've already mentioned, The Intelligent Investor, is another book that falls in that category. Those are two books that I want us to dive into. Security Analysis is a pretty intimidating book. It is a beast of, it is a logger's dream, right around 700 pages. And don't think there's many images on those pages. Another book here is called The Snowball, Warren Buffett and the Business of Life. It's basically kind of the story of Warren Buffett and his life, which obviously will include a lot of Berkshire Hathaway and his investing. And what else do I have behind me over here? There's also The Essays of Warren Buffett by Cunningham, which I think is really going to be a distillation or kind of a coming together of a lot of his letters to shareholders. So I want to use that resource as well, but I'm a big fan of going to the primary resources. because I just think it's really important to go to the mouth, to get to the horse's mouth, as we like to say in America, or some people do anyway. So I want to go to the source as much as possible. All that being said, I think next week is when I'm going to begin working through some of his letters. And the first few letters are like super short, so that's not overly ambitious to say that. But this is going to be a path that I'm going to chart as I go forward, because as we get into this stuff is really going to reveal how best to move through it. But the key idea I want to communicate through all this is we are business owners. Our investing is a business, and we need to treat it seriously as a business. We are entrepreneurs as investors, and our retirement is a business. All that stuff, we have to view it as a business. And in my experience, that's not what we are doing. And I want to see that change. Again, we are business owners. We are portfolio managers. That's who we are. And other people may not pay us to manage theirs, but we're managing our own. So all that being said, that's where we're focusing, and that's where we're going forward from here. And I am stoked about it. And that doesn't mean interviews won't be a part of things anymore. I actually have some other ideas I'm really excited about regarding interviews. Continue to have interviews with public stock investors like I've done a lot of before, but even maybe getting some stuff from the private equity, venture capital, angel investing, hedge funds, and other things like that as well into the mix is something that I'm considering, as well as different styles of investing summits, in addition to the DIY investing summit that I mentioned that we conducted back in January. So I'm stoked about that. If you're excited about that too, email me and let me know. I cannot wait to hear from you to find out what you think about this and maybe new ideas you may have to go along with this or to augment or nuance it. So email me, Brian, Brian, at investorinthefamily.com. That's Brian at investorinthefamily.com. Or you can just email mail, MAIL, at investorinthefamily.com. I get all of those. So I look forward to hearing from you, and we'll have more on that next week. But right now, briefly wanted to go through some investing news over the past week. Barron's Up and Down Wall Street column by Randall Forsyth. Really a lot here that's worth super getting into. It really talks about the IPO market right now. He talks about Canadian Goose Holdings that had their IPO recently, Snap, also known as Snapchat. And he also talks a little bit about Tesla's secondary offering that they had recently as well. And just a few takeaways from all that is basically all those were received very well. None of those had any issues getting capital. Tesla, the money came very easily for Elon Musk. He had no problem raising the money he wanted. Snap got snapped up, forgive the horrible pun, very quickly. The Canadian Goose shares got snapped up very quickly and saw nice boosts in all those, at least short term. So all that being said is that there's still a lot of enthusiasm out there. And as Forsyth says, such enthusiasm bespeaks the animal spirits that drive bull markets. Whether it's $1,000 down parkas, referring to Canadian Goose, obsessive photo apps, referring to Snap from millennials, software outfits spilling red ink, or cool electric autos, referring to Tesla, these products and their growth potential are inspiring investors just as they did for BlackBerry. So, basically he's talking about there's still a lot of momentum there going on. He also refers to Janet Yellen and the Fed raising interest rates. Obviously, they boosted rates 0.25% from 0.5 to 0.75 range to the 0.75 to 1% range. And then there is some Fed speak that requires some interpretation about how much they'll be boosting in the future, and said that it's possible they may be aiming for a number that's around 1% over inflation, and the Fed is targeting inflation around 2 to 3%. So that, are they targeting the Fed fund rates to be around 3 to 4%? Is that what that means? We're not really sure yet. Bottom line is that interest rates will remain lower for longer than bond bears who had been talking up the notion of 4 rate hikes this year had feared. So basically, it sounds like there may not be quite the people who are bond bears have been promoting a much more aggressive rate increase environment that maybe will be happening. So whatever that means, we'll see in the future, because bottom line is we don't know yet. But it seems like the general consensus continues to be maybe a few more quarter rate hikes this year, depending on lots of factors out of our control. So anyway, that's just a little bit of news from this last week. Nothing revolutionary, nothing to spend too much time on. Again, what I'm most stoked about is moving forward from here and us becoming business owners. And that's just gets me really excited. And hope you can pick up on that from my voice from this podcast. But anyway, that is this week's podcast from Invest in the Family. My name is Brian Bain. I believe in you and I care about you as investors. Hey, we are business owners and that's awesome. Have a great week and I'll talk to you soon. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.